If you've ever traded BTC and felt like the trend looks bullish but the move still fails, it usually comes down to one thing. Price moved, but conviction didn't. Most trend tools only watch price. They don't care if the move was supported by real buying and selling pressure. That's why you get chopped up in ranges, late entries on breakouts, and false reversals that look perfect for 2 candles and then die. Today, we're fixing that with Smart Money Flow Cloud, BOS Waves. This indicator is designed to read trend through volume-weighted money flow, not just moving average crossovers. It builds adaptive volatility bands that expand when flow is strong and tighten when flow is weak. Then it marks clean regime changes with simple buy and sell labels. We'll use it on BTCUSD 1-hour time frame, and I'll show you exactly how to set it up, what every visual means, and how to trade it in a way that stays simple and repeatable. To get started, we're doing this on TradingView, the platform I'm using. If you don't have an account and you want the same layout, there's a link in the description to sign up. Open TradingView, load BTCUSD, switch to the 1-hour, then click Indicators and search Smart Money Flow Cloud, BOS Waves. Add it to your chart. Once it loads, you'll immediately notice the chart gets a lot more readable. You'll see a colored cloud that flips between bearish and bullish regimes, 2 adaptive bands that act like flow-based trend boundaries, buy and sell labels at regime switches, diamond markers during pullbacks, and a strength meter that shows how strong the current regime is. Here's what each component means in plain English. First, the indicator creates a flow-informed baseline, which is like the center line of the system, but it's not just any average. It's built using a smoothing engine and then anchored to flow logic, so it reacts differently when volume and price behavior show real pressure. Around that baseline, the script builds adaptive bands using volatility, so the bands widen when the market is moving with strong conviction and tighten when the market is quiet or uncertain. Now the key part, the indicator doesn't treat all price movement as equal. It uses a money flow model that tracks where price closes within each candle's range and weighs it by volume. So if candles consistently close near their highs on strong volume, the system reads that as real buying pressure. If candles close near their lows on strong volume, it reads real selling pressure. Then it uses that flow strength to adjust sensitivity and bandwidth. That's why this tool feels smarter than a normal channel. It's not just reacting to volatility, it's reacting to volatility plus flow. Next, the regime colors. When the system is bullish, the cloud shifts into a bullish color theme, and when it's bearish, it shifts into a bearish theme. This is your first and most important read. It's telling you which side of the market has control right now. Then you have the buy and sell labels. These appear when price crosses the adaptive bands and the regime flips. A buy label marks a bullish transition, a sell label marks a bearish transition. These are not random signals. They're meant to show you the moment the system believes the market switched from one regime to the other based on flow-confirmed movement. Now, look for the diamond markers. These diamonds show up when price pulls back to touch the baseline while staying inside an established regime. In other words, you're in a trend, price cools off, tags the baseline, and the indicator flags that interaction as a retest opportunity. This is huge because it gives you a clean, structured way to enter trends without chasing tops and bottoms. You'll also notice the baseline cloud thickness changes. When the cloud looks wider and more obvious, that typically means intrabar momentum is stronger. When it's thin and tight, the move is weaker or price is compressing. At the bottom, you'll see a trend strength gauge that moves from bearish to bullish and prints a percentage strength reading. You can treat that like a confidence meter. When strength is low, the market is usually choppy and transitions are more likely. When strength is high, the trend is more stable and pullbacks tend to respect the baseline better. Now let's go into the settings because you asked for a specific change. Open the indicator settings, go to Inputs, and find the length setting. For this video, we're changing length to 150. Here's what that does. Length controls how smooth and slow the baseline becomes. A shorter length reacts faster, but it can flip more often and catch more noise. A longer length reacts slower, but it filters out a lot of chop and keeps you aligned with bigger intraday trends. On BTCUSD 1 hour, setting it to 150 makes the regime shifts more selective and gives you cleaner trend segments, especially during weeks where BTC likes to fake both sides before choosing a direction. After setting length to 150, click OK. Everything else in the settings is optional customization, but here's what matters conceptually so you understand what you're changing if you ever tune it later. The trend engine can control how the baseline is smoothed, flow settings affect how stable the money flow readout is, and settings affect how tight or wide the boundaries are. If you ever feel signals are too jumpy, you smooth flow more. If you feel signals are too late, you reduce sensitivity or shorten length. For today, we're keeping it simple. Just set length to 150 and trade the system as designed. Now, let's talk about how to trade this indicator on BTCUSD 1 hour. We're going to use two entry types, the regime switch entry and the baseline retest entry. The goal is simple: trade in the direction of the current regime, avoid fighting the cloud, and use the baseline touch as your low-risk entry when possible. First, the bullish setup. A bullish trade starts when the indicator is in a bullish regime. You'll see the cloud shift into bullish colors, and you'll often see a buy label near the start of that move. Condition 1 is that price is respecting the bullish structure, meaning it's not living below the baseline and it's not constantly stabbing into the bearish side. You have two ways to enter. The first entry is the aggressive entry. When the buy label prints and the candle closes with strength below the boundary, you can enter on the next candle. Your stop goes under the nearest swing low or under the baseline area that should act like support now. Your target is 1.5R. That keeps the strategy consistent and prevents you from overstaying in choppy conditions. The second entry is the clean entry, and this is the one I prefer. Wait for a pullback. Once you're in a bullish regime, you wait for price to come back down and touch the baseline. When that happens, you'll often see a diamond marker. That's your alert that price has retested the baseline inside the bullish regime. Now, you still want confirmation. Don't buy the first touch blindly. Wait for a bullish continuation candle, like a strong green candle that rejects the baseline and closes back upward, or a bullish engulfing candle that reclaims the short-term structure. Enter on that confirmation candle close. Stop just below the pullback low or slightly below the baseline touch area, and target take profit again at 1.5R or scale out partially and let a runner ride if BTC is trending hard. Now, the short setup is the exact reverse. A bearish trade starts when the indicator flips into a bearish regime. The cloud turns bearish, and you'll often get a sell label at the start of that transition. Condition 1 is price staying below the baseline area more consistently and failing to reclaim it. Again, you have two entries. The aggressive entry is the sell label entry. If the sell label prints and the candle closes with strength below the boundary, you can enter on the next candle. Your stop goes above the nearest swing high or above the baseline area that should act like resistance now. Your target is 1.5R. The cleaner entry is the retest entry. Once you're in a bearish regime, wait for price to pull back up into the baseline. When price touches that baseline from below, you'll often see a diamond marker. That's your retest signal inside the bearish regime. Wait for a bearish continuation candle. A bearish engulfing candle is perfect here. Enter on the close, stop above the pullback high, and target 1.5R. This is how you avoid chasing. You're letting the system tell you the regime, and then you're using pullbacks to the baseline to get a controlled entry. Now let's talk about how to avoid the biggest mistakes with this tool without overcomplicating it. If the strength gauge is low and the cloud keeps flipping colors, don't force trades. That's usually a range. In ranges, the baseline gets crossed too often and retest signals can become noisy. In those conditions, it's better to wait for a clean regime switch and then the first proper pullback. Also, don't treat the buy and sell labels like magic arrows. They mark regime transitions. The real edge comes from following the regime and getting in on pullbacks when price respects the baseline. And remember, we're on BTCUSD 1 hour. BTC can move fast and it can wick hard. Give your stop enough space to survive normal volatility, but keep your risk fixed so one trade doesn't ruin your week. So the full strategy is simple. When the cloud is bullish, you only look for longs. Best entry is a baseline retest with a diamond marker, followed by a bullish confirmation candle. Stop under the pullback. Target 1.5R. When the cloud is bearish, you only look for shorts. Best entry is a baseline retest with a diamond marker, followed by a bearish confirmation candle. Stop above the pullback high and target 1.5R. And if the system is flipping back and forth and strength is weak, you wait.
A quick word on expectations. This indicator is built to read trend through flow, which can give you cleaner regimes than simple moving averages, but no tool is perfect. It works best when BTC is actually trending and volume participation is meaningful. Use it with basic market context, respect major higher time frame levels, and always trade with risk rules. This is not financial advice. Everything here is for education only. Always manage your risk, test your settings, and make sure any strategy fits your own tolerance before you put real money behind it. If you found value in this breakdown, leave a like. And if you want more scripts like this, simple, clean, and built for real execution, consider subscribing. Thanks for watching. See you next time.